Hey, it's Clay at ClayTrader.com. This will be the weekly review of the Power Profit Scan newsletter, which is a portion of the Inner Circle subscription service that I offer. This is the newsletter part, and then I also comes with a live chat room. But for this, again, we're going to be focused on the newsletter. A couple of quick disclosures. First off, I'm not trying to make it seem like every alert I send out is some massive money-making success, or that, hey, if you sign up, you're always going to make money. That's just not the reality of trading. Nobody is perfect. No scanner is perfect. So losing trades do happen. And if you watch past videos in this series, you've seen me show losing trades. And spoiler alert, there may be a losing trade in this one. But I bring all that up because it illustrates a very critical point for having successes trading, and that is risk management, risk control. Because yeah, losing trades happen despite what some people may try to portray or proclaim. But on the flip side, winning trades also happen. So when those winning trades do come along, you want to make sure you have your account in the best position possible for everything to continue to grow over time. And then the second thing, as far as we're going to be going back to the week of August 5th, Clay, why are you going so far back in time? Very fair question. Two reasons. First off, it's just simply giving the chart plenty of time to play out so we can see what happens. And then second, just a matter of being fair. This is a paid-for service. So the last thing that I would want is for somebody to pay for something and then all of a sudden see what they just paid for out there for free. I'm sure you can understand that. So with that being said, let's get to it. Before I get to this first alert, two main questions I get all the time. Hey, Clay, what prices do you cover? What price range? I don't care about prices. I care about probabilities and odds of success. So if I see something that's a penny stock that I think, wow, that looks like it has a really great odds of success, I will alert it. If I see something that's up over $100 and I think, wow, that looks like it's got a lot of good probabilities, lots of odds of success, I'm going to alert it. I'm not going to ignore a really solid setup just because it doesn't fit some sort of price range. So price range all across the board. And then the second question, when do you send these newsletters out? It is sent out over the weekend. So you have plenty of time to look things over. It's not like you get a text message and then you have to go and rush and do anything like that. You have more than enough time to look things over. So for this first alert that was sent out, ticker symbol SUNW, titled it a panic play, and basically there is a big gap. It ran all the way up there and then started to pull back and pull back and pull back. So the whole thing was, let's see if the panic can continue and go down to this trend line. One thing to update on the chart, you're going to see that it was actually at $4. That's because a reverse split occurred over this time frame. So you will not see those prices anymore, but that's just because from the time it was alerted until now, as of the recording of this video, there was just a reverse split, but the pattern and everything else remains the same. So here's the alert before the weekend or before the new week started. So you can see right there, gap down right away. And I could see somebody saying, well, you wouldn't have been in it because of the gap down, so that would give you a signal that it was going to be bearish. And that's true, but for example's sake, let's just say you decided to still get in right around that area right there. And then let's say you decide, you know what? No, it's going to bounce back up. It's going to bounce back up. So you get undisciplined. You decide to not control the risk. You decide to not just keep this a small loss because you think, well, it'll come back up. They always come back up. They always come back up. They always come back up. And the price continues to drop and drop. Well, they always come back up. The price, see, it's coming back up and then down it goes once again. So right there, that move, but potential loss of 44%. Let's just keep it even bigger than what let's just call it 10%. Even I'd argue that it should be even smaller than that. But like I said, let's err on the side of caution. Either a 10% loss on this one or a 44% loss. So keep those numbers in mind as we go forward. 10% loss, disciplined, 44% loss, undisciplined. So yeah, this was an alert that just didn't quite work out. It is what it is. That's why you got to keep risk controlled. Next one to take a look at here is FHN, and this was in the trend trading category. Just mapped out how this had been in a very nice uptrend, and then it pulled back. So let's see what occurred after the pullback within the uptrend. So the week starts to unfold here, pull back a little bit more. Didn't quite hit the trend line, got somewhere near there. But you can see right there, definitely hit right off that trend line. Nice green candle, nice solid bounce. So that's one of those situations where things definitely looking very, very attractive. And then you get that candle, things are looking solid. And then after that, the price just rolled back over and good for a 5.3% move. Now keep in mind, this is we're talking about a over $15 stock here. So percentages, the higher the price something gets, percentages don't add up quite as fast. But the point here being, yeah, it definitely was a winning trade. But sometimes this is also how the market plays out. You'll be in a trade, things are looking good, and then the price just totally rolls back over and that movement right there, I would guess, would have taken out the vast majority of people in it. And then just to rub salt in the wound, after it takes people out, it decides, you know what, let's just go back up. And since then, it's gone back up and essentially is, currently as of the recording of this video, testing those previous highs. But again, that's just how it goes. So it wasn't a losing trade by any means, but a trade where things were looking so powerful, and then it rolled back over, and then all of a sudden it's worked its way back upwards. So have you been there before where you're confident about a trade, you're excited, and then it turns out to be a modest winner, and then all of a sudden the price goes back in your favor? You're not alone. It happens, but that's just, got to keep things disciplined. Let's now take a look at ticker symbol BX. Again, one of these in the trend trading category. Just mapped out how the overall trend had been very, very, favorable in the upwards direction. And like the previous one, there had been a pullback within the uptrend. So let's see how this one played out. So here's what things look like going into Monday. Now, the key here is that there is a gap down. And the gap down definitely very kind of polite, quote unquote. It'd be much worse if the price gapped up and then all of a sudden the crash to the downside. But at least with the gap down, that's basically the stock's way of saying, yeah, things might get a little bearish today. We're not going to do any, games where it's a gap and trap where it gaps up and then pulls back. But it did gap down. So in that situation, there was definitely an opportunity to potentially get a much better price down around here. Now, at this point, it would be totally realistic for people to say, you know what, I'm going to get in down here at this former area of support right here around the $44 mark. But, I'm not going to do that. I'm not going to manipulate the numbers to play, the best case scenario type, situation. But again, getting down right around here, definitely more than realistic given the nature of the gap down and kind of, giving everybody a heads up that, this day in particular was going to be pretty bearish. So again, definitely realistic to have gotten down around here. But like I said, for the numbers sake and try to keep this as conservative as possible, I'm running the numbers off of, not in any sort of entry point down below 44. But let's see how this one played out from this point. And you can see very nice recovery. Pulled back a little bit, but nothing crazy. Pulled back again, nothing crazy. And as of right now, at the recording of this video, good for a 21.8% move, which again, when you think about that, this is, basically a $50 stock. 21.8%. And then if you factor in the options market, and I'm not going to go in with that, but we have a lot of members that play options. So the options on this one, definitely made a whole lot more than 21.8%. And if you understand how options work, then you know exactly what I mean by that. Point being here, though, another very nice mover. And think about that, though. Think about had you been undisciplined on that first one, where it was negative 44%. And then let's say, even if you had played both of these perfectly, so 21.8%, another one was 5.3%, that's still, let's just call it 27%. So you're still in the hole. And think about that. You've been right 67% of the time. You've been right 2/3 of the time, but because you got undisciplined, you're still way in the hole. So think about that. The power of discipline, the power of controlling your losses. Had you been disciplined and been down 10%, then here, this one in and of itself would have wiped that away. But if you hadn't, then this one playing it perfectly, the other one playing it perfectly, you'd still be in the hole. And then the final stocks I'm going to take a look at here, this is from the portion of the newsletter where there are no images because this is based on a class that I offer at the site called Trampoline Trading. So in this situation, these people have knowledge, so they don't need anything mapped out for them. They just need, it's kind of like they know how to fish, they know how to bait the hook. So this is my way of just saying, hey, look, there might be some fish over in that area of the pond. And that's all they need. I'm just pointing them to some sort of area in the pond, and then they know how to go and take it from there. So this situation, like I said, doesn't have any images just because these people are armed with knowledge. They know how to do the setup. They know how to go through the process. So all I need to do is throw a ticker symbol at them, and they know how to take it from there. So I'm going to go through all three of these. Mark right here was either probably a no play, or I could see it being just a small controlled loss. So Mark, we'll just chalk that up as a losing trade, nothing drastic. But let's take a look at GCAP first and then TCX. So let's see how this one played out. Got off very, very nicely. Continued on up. And then here's the thing again. Once again, pretty nasty pullback there. Perhaps I could see some people maybe staying in, but let's just say you got knocked out. So again, great trade. Over 10% in just a couple of days. But again, the cruelty of the market. So it rolls back over. And then all of a sudden, boom, just like that. Now it's all the way all the way up there. So again, it doesn't make you a bad trader. It just makes you a disciplined trader. It makes you a trader with a strategy. And sometimes these are just the cruel jokes that the market plays on you. So again, nice, solid move. I mean, we'll just call it 10% that you got out of it in just a couple of weeks. You're not going to get 10% at your local bank. But yeah, then it rolls back over, takes people out, stops them out, and then boom, there it goes. I mean, welcome to the world of trading. And then the final one here, let's take a look at TCX. So here we go. For time's sake, you can see it came to life pretty nicely there. Consolidated a little bit, nothing crazy. Came to life again, new highs. Pulled back a little bit, nothing crazy. Built those higher bases. Pulled back again. Then really started to come to life. And then really started to come to life that much more. And so far, as of the recording of this video, 30.2%. But I mean, this thing could get more into it. Again, 30% on a stock that's up over $50. Not too bad at all, but overall, a great move there on this one. And once more, not saying you played it perfectly, but even if you got 15% out of it, and you go through and you take half of all the winning trades, and then you can correspond that with either a 10% discipline loss on that first one, SUNW, or the 44% loss. More of the story, it's okay to be wrong. It's okay to take losses. As long as they are controlled, that's fine. Because like I said at the very start, yeah, losing trades happen, but winning trades also happen, and when the winning trades do happen, they will wipe away those losses, assuming they're controlled. As I wrap things up here, if you are interested in becoming a member so you can get the newsletters and become part of the live chat room, just go to claytrader.com/team. The number you really need to ask yourself in regards to this right here is, do I believe the service can make me more than $8.25, not per day, but per week? If you think the service can make you more than $8.25 per week, then you will get a great return on your investment. So that's kind of the way to approach this, because that's what this is, right? It's an investment, right? You're investing into yourself. You're investing into a community. And do you think you can get that investment paid for? Well, the payback number, again, is $8.25 per week. There is also a mobile app that comes with it. So it's not one of these situations where you got to stay chained to your computer or anything like that. You can stay in touch with everything no matter where you're at. So that is how it all works. If there are any other questions, then please let me know down in the comment section or hit me up through email or through the live chat on the site. I'd be happy to answer any questions you have. But if not, then yeah, sign up and I'll see you on the inside.